Hi, Joe Cantu here, and there are 7 major reasons that the stock market is on its way to higher
Welcome to
ground.
Retirement Tactical Money Management. Joe Cantu, Chief Investment Officer of Cantu Tactical Wealth Management, is your host and has over 30 years of experience in the retirement money management profession. He is a West Point graduate with a master's in business administration and has worked for 3 of the largest Wall Street firms as a stockbroker and portfolio manager.
Hi, Joe Cantu here, and there are 7 major reasons the stock market is on its way to higher ground. Today is June 2nd, 2023. So let's get started. With the debt ceiling about to be signed into law, there are no major obstacles to impede the investor sentiment. We believe there are 7 major reasons the stock market will move to higher ground. Number 1, the COVID-19 supply issue. Remember that? Where you couldn't get your refrigerator for 6 months or stove? Well, that problem is solved. Number 2, China and the foreign countries have now reopened. Manufacturing and consumption is on track in those countries. Corporate valuations are on the rise. So the predicted overall bad earnings that were supposed to occur due to rising interest rates and inflation never did materialize and was a myth outside of housing, and analysts are now raising their estimates. So number 4, several research analysts are reducing expectations of a recession in 2023. Number 5, jobs continue to increase and their pace dictates a robust economy, beating estimates. Number 6, the Federal Reserve is now slowing its pace of interest rate hikes, which originally spooked the market. But now with earnings being strong, it really has not much of a bearing on rising interest rates. However, their pace of raising rates has slowed. And number 7, primarily the first quarter's earnings scorecard. Excellent overall earnings. And let me break that down for you. So first, for the first quarter of 2023, 97% of S&P 500 companies reported actual results. Of that, 78% of the S&P 500 companies have reported positive, quote, positive earnings per share surprise. And 76% of the S&P 500 companies reported a positive revenue surprise. If you take the first quarter 2023 S&P 500 blended earnings, looking at all the companies, 97.9% of the companies in the S&P were positive. And there was only a small number of companies showing a decline, and that represented only 2.1% of the S&P 500. As I've said in the past, rising interest rates have very little bearing on earnings reports for these companies. Now let's talk about what could be the catalyst for the market. So remember, on November 16th, 2021, when the Fed reported interest rates hikes, some of the first stocks to start cratering were technology stocks. Well, now technology stocks will most likely be leading the market to higher ground, except it's a different theme. Now today, that theme is artificial intelligence. If we go back a year and a half ago, that was not a theme. Today, artificial intelligence is a theme, and that's going to be expanding the technology market. let's talk about our actions here at Cantu Tactical Wealth Management. Our actions here is we remain equity heavy in the investment portfolios with an AI theme slant coupled with selected broad market industry sectors showing positive momentum. We believe that it's possible that the market will move to higher ground. We further believe that come June that the Fed will not raise interest rates. It may be the first pause we've seen in many months. But we also believe that they will continue to raise rates. So we believe in July that you may see another 25 basis points hike in July, despite a pause in June. And that's primarily because the jobs report is still so strong, and the jobs number hasn't curtailed. We're still producing more and more jobs. But we believe that if the Fed does continue to raise interest rates in July, that it will have very little effect on the market. Why? Because now the analysts have seen that earnings are in fact strong, and that despite an interest rate hike, they have been affected very, very little. That concludes my presentation. I have some disclosures at the end. Take a listen.
Joe Cantu, Chief Investment Officer of Cantu Tactical Wealth Management, is your host and has over 30 years of experience in the retirement money management profession. He is a West Point graduate with a master's in business administration and has worked for 3 of the largest Wall Street firms as a stockbroker and portfolio manager. Over 10 years ago, he created Cantu Tactical Wealth Management, which actively balances and selects investments based on a tactical approach rather than the traditional strategic management method. Instead of the buy and hold philosophy, he believes in the pursuit of finding investments showing momentum, performance regardless of the direction of the market. His experience includes IRA accounts, 401k rollovers, trusts, endowments, defined benefit plans, 403bs, and 401k plans. Additionally, he served as a night college instructor for seniors, teaching high net worth retirement and estate planning for 14 years. Podcast views and personal opinions are for educational and entertainment purposes only and does not constitute a recommendation. Investing has risk of loss, and you should consult with your own advisors for any financial decisions. Cantu Tactical Wealth Management and Joe Cantu are a fiduciary firm and registered investment advisor in the states of California, Florida, Georgia, and Texas, providing pure independent advice and money management.